Hey everyone, it's Janine here, and today I'm here to answer the question on whether or not you should evenly fund your RSPs when there are two individuals in a relationship. Now, when I jump into situations like this and have subscriber questions, I think it's important to note that everyone's circumstance is different, so what works for one set of people may not work for everyone else. But here are some things to consider when determining whether or not you should be evenly funding your TFSAs and RSPs between your two incomes and accounts. When it comes to looking at whether or not you should evenly contribute to both individuals' RSPs, one of the things to look at, of course, is actually how much money each individual makes. If one individual is in a significantly higher tax bracket, it may make sense for them to contribute more so to their RSP than their TFSA, just because they get a higher deduction. That being said, the lower income spouse may want to look at maxing out their TFSA so that they can grow that money tax-free while not being able to take as large of a deduction for the RSP. One of the other things you may want to consider is whether or not that low-income individual actually takes a deduction when they are contributing to their RSP. So in many circumstances, you may have employer matching, and it may make sense to leverage that to get as much money as you possibly can, but do know that you don't actually need to take that deduction in the year that you contribute to your RSP. So if you know that you're going to be in a higher income bracket down the road, you may want to save that RSP contribution to take it when you are making more money and you do find yourself in a higher tax bracket. These contributions can actually be deferred until age 71, so you definitely have time to plan out your income and take it when you are actually in a higher tax bracket, which means more money back in your pocket. One of the other things you may want to consider is leveraging a spousal RRSP. So if the higher income earner still has RSP contribution room, but you are looking at a way to smooth your income in retirement, this can be a great way to do so. What the spousal RRSP allows you to do is the higher income individual can actually contribute to the spouse's RRSP and take the deduction because they are in the higher tax bracket. The RSP is in the name of the individual that set up the RSP, so the lower income spouse, and you would find that in retirement, the income that is withdrawn out of the RSP would actually be taxed in the lower income individual's hands. So this is how you may leverage a little bit of income smoothing when it comes to managing your income in retirement. So at the end of the day, there are a couple of different things to keep in mind when looking at how to split your contributions between both spouses' RSPs and TFSAs. I would say that it is very important to always make sure that both spouses are contributing to their accounts so that one person doesn't feel like they are not able to save because the other person maybe needs to catch up or has a higher income. It is really important to look at your family income as just that, one family unit of income, but making sure both individuals have assets to their name is very important for financial independence. If you enjoyed this video, please give it a thumbs up and subscribe to my channel. And if you have any questions, please leave them in the comment section below, and I'll see you next week.